In our agrochemical series, we covered Aztec Life Sciences last week. Today we will focus on India Pesticides Ltd and one of its key products, Prochlor, for which the Government of India has recently imposed anti-dumping duty. This is not a buy or sell recommendation. The company was listed in 2022 amidst a lot of investor interest, and the issue was subscribed 29 times and the shares were issued at Rs 296 in the IPO. The company's margins were close to 30% at the time of listing. The company always had very healthy margins exceeding 20% until 2023. But the margins started falling in 2023, as was the case with Aztec as well. It will be more evident if we look at the quarterly margins. The operating margins started dropping, reaching a low of 3% in March 2024. However, the margins have started to recover since. The profits before tax has also declined sharply along with the margins. However, the company went on to add capacities and the fixed assets increased from 174 crores in 2022 to 328 crores in 2025. Even though the company's profits declined, it didn't go into losses as Aztec did. Also, the company's borrowing didn't go as high as Aztec due to better cash flow, and the company was able to raise 100 crores through initial public offering. Now let's analyze the reason for these declining margins. One of the primary drivers was the burden of expensive inventory at a time when raw material prices were falling sharply. If you look at the company's balance sheet, the company's inventory increased from 70 crores in 2021 to 225 crores in 2023. The whole market was in euphoria with the kind of margins chemical companies were making. Everyone was amassing inventories to keep up with the demand until demand waned and raw material prices started declining while companies had huge high cost inventory. The demand within China waned and with the increased capacity they started dumping everywhere. This led to lower margins and the company had to write off inventories worth 22 crores in the first half of financial year 2023. The second major reason is inventory destocking. To illustrate this, I will refer to a section from Adama's FY 2023 presentation. Adama is one of their clients. The whole industry went into an overstock situation in 2022. If you look at the second graph, Adama's inventory increased from $2,151 million to $2,431 million in 2022. Following very high channel inventories, the company had to reduce the inventory from $2,512 million in Q1 2023 to $1,848 million in Q4 of 2023. That means a reduction of $583 million, which would have directly impacted technical manufacturers like India Pesticides Ltd. Syngenta, another major player, in its Q4 FY24 presentation also mentioned that its sales were impacted by a reduction in channel inventories and adverse weather conditions. However, it mentions that the reduction in channel inventories is largely over by now. Red Sea crisis also must have impacted the margins and working capital with higher transit and freight expenses. Now coming back to IPL, it is a leading manufacturer of agrochemical technicals, APIs and formulations. Technical is a raw active ingredient before being converted into a final formulation for use. I will explain this further with an example when covering a particular product. The company produces 27 technicals for domestic use and 32 technicals for export and many formulations. The company does bulk formulations and direct to B2C sales as well. The company has two plants with 24,200 metric ton technical capacity and 6,500 metric ton formulation capacity. The company has recently expanded its formulation capacity to 10,000 metric tons. The company had a revenue share of close to 80% from technicals in 2022 and 23. However, the formulation business had a really good 2025 with revenue increasing from 175 crores in 2022 to 280 crores in 2025 and thereby the revenue share went up to 34%. Meanwhile, the share of domestic business increased from 53% to 62%. In a tough period, the formulations and the domestic business helped the company, unlike Aztec. We mentioned earlier in our previous video that Aztec is a major player in triazole fungicides. Herein, IPL is a major global manufacturer of thiocarbamate herbicides like prosulfocarb and some fungicide technicals like Captan and Folpet. Another major product is Petlachlor. The first three are primarily intended for exports and Petlachlor is mainly used domestically. We analyzed Adama's inventory earlier as it is mentioned as one of IPL's key customers and Adama is one of the largest suppliers of Captan and Folpet in Europe. Europe renewed the registration of Captan and Folpet for 15 years in 2024. As per the company, demand for Folpet is growing and Pro-Sulfocarb is also seeing some growth this year. There is some pricing pressure on Pro-Sulfocarb, but the company has optimized the process to reduce the cost of its production. The company also has some export orders for Captan as well. However, the product that we see of significant importance is Petlachlor. The government has imposed anti-dumping duty on June 21, 2025 on Petlachlor or its intermediate PDA originating or exported from China for a period of 5 years. This should significantly benefit IPL as they are the major producers of Petlachlor in India. IPL manufactures both its intermediate PDA and Petlachlor. Petlachlor is a selective pre-emergent herbicide widely used in rice cultivation to control a broad spectrum of weeds before they emerge. So these herbicides are applied within 4 to 5 days of transplanting. In India, Kharif is the primary rice season, so bulk of its sales happen in Q4 and Q1. Earlier in this video, I mentioned that I would explain what a technical and formulation is. Let's do it with Petlachlor. The industrial process adopted may be different, but these are the various stages. The key starting material or the raw material for production is 2,6-diethyl aniline, also called 26-DEA. After a chemical process, it is converted to PDA, which is the active intermediate. From its active intermediate, Petlachlor is produced, which is the active ingredient in concentrated form, which is diluted to form the final formulation. And IPL markets it as Agni for use on rice crops, which is a 50% Petlachlor product. Similarly, other players like Danuga markets it as Grace. The scope of the import duty covers PDA, Petlachlor technical and formulation as well. IPL increased its PDA capacity to 6,000 tons in April this year and has plans to further increase its capacity to 8,500 tons by the second quarter. It is also backward integrating to produce 26-DEA, the key starting material for Petlachlor. The production is expected to start by September 2026. We mentioned earlier that bulk of Petlachlor sales happens in Q4 and Q1. So will the company get any benefit of expanded capacity this financial year? The company has clarified this in the quarterly call that intermediate sales generally starts by November to December. So the company will see some benefits accruing from third quarter and the company expects to generate a revenue of 150 crores from PDA and Petlachlor sales this year. At full utilization, the company expects to generate 300 crores from the sales of Petlachlor. In the first quarter, the sales were closer to 55 crores. Now let us have a look at some of the concerns or the key risks. US tariffs are a concerning factor for any exporting country. The company may somehow manage a 25% tariff, but the 50% tariff may be too difficult to navigate. Even though the company has almost 32% of revenue from exports, only 3 to 4% is from US, which is a consoling factor. The second risk is the environmental concerns. As we mentioned earlier, European Union renewed registration for Captan and Folpet for 15 years in 2024, which are IPL's major technicals. In 2020, there was a draft proposal to ban 27 pesticides in India. This included IPL's key products like Captan and Serum. However, only 3 among the list was banned and it didn't include any major IPL products. Chinese dumping is continuing concern for the whole industry. With increased capacities and subdued demand in China, the competition from China is a major risk in this industry. The fully integrated operations of many Chinese players make them cost effective as well. The company is expanding its capacity for PEDA, the intermediate for Petlachlor, to 8,500 tons and expects to meet 70% of India's requirement. Currently, as per the anti-dumping investigation data, there are two producers of PEDA domestically, which are IPL and NACL. NACL imports PEDA as well. There are 9 producers of Pratilchlor Technical, and some of the users or importers of PEDA include companies like Heranba, Insecticides India, NACL, etc. Now, they will have to pay anti-dumping duty for imports from China. If they plan to add capacities of the intermediate, eventually there will be competition in these products from domestic players as well. The company has issued shares at Rs 33.70 to certain individuals in the 12 months prior to IPO. The offer price at the time of IPO was Rs 296. It is not a concern now as it was disclosed very clearly in the IPO document itself. I'm just mentioning so that the investors who are tracking it are aware of it. The promoters have also bought a small quantity of shares from the open market recently as well. The company also has plans to spend 116 crores this financial year for capacity expansion. Of this, 52 crores will be used up at existing facilities and 64 crores at the wholly owned subsidiary Shelby Specialty Limited. It needs to be seen how fast the company can make optimum use of the new capacities. In the agrochemical segment, IPL is one of the companies with a strong balance sheet. The company is net debt free. Part of it is attributed to its IPO in 2021 where they raised 100 crores. Demand seems to be improving for the company's key technicals like Kaptan and Forpet. The anti-dumping duty imposed by Government of India on Pratilchlor and its intermediate PDA in all forms including formulation could significantly benefit the company. The company has additional capacities coming up online in second quarter. At peak utilization, the company expects to generate 300 crore revenues from Pratilchlor and its intermediates. The company is also trying to register new products in Europe and US. The domestic formulation business made up for some of the lost revenue from exports last year. The margins after a slump has started to recover, and the company has a revenue target of 1000 crores in this financial year with a margin in the range of 18 to 20%. The anti-dumping duty investigation is a good read. I will add the link to the comments.